Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and we're going to start here. A reminder, Cerebras Systems, which is an AI chip maker, has been added to the Link2 platform. I haven't done it yet, but I'm about to plunge into AI investing. That seems to be where that's where Gary Gensler transitioned the second he lost the Ripple lawsuit. So he must know something we don't know. Now it's Friday, and so I'm going to show you what one person is saying about XRP price. He says if this pattern continues to play out for XRP, we have a dip to 52 cents, followed by a pump to $4.30, which would be an all-time high. Dip to 160, pump to 740, dip to 6, then pump to 18, then Goblin Town, whatever that is. It's been accurate as F so far. Let's see if it continues. I have no idea what he just said, but he sees something. So sometimes I do those chart type things, especially on Fridays, partially for a joke, because who knows. Speaking of a joke, these two guys are a joke. Listen to this. This is what these guys were saying over the course of the last few years.
And XRP is going to
Bitcoin maxis.
Ultimately zeroed.
Oh no, come on, really?
Zero.
XRP, you know I hate XRP. Why is that? Because it's a scam money. It's going to take away your wealth. Yes, it's pumping. Yes, I agree. It's pumping right now. I can see that. But this is going to do well because people don't understand it's a centralized system.
What you don't understand is that the government knows who the 4 Satoshis are, which is your centralized system, and they're trying to make you think they don't. Well, Carl from the Moon, who is one of those guys, I don't believe XRP will go to zero. It was a stupid joke. And then we have some more Bitcoin maxis here. Listen up.
Back SEC, a lot of lawyers.
The capitulation and the redemption for XRP holders is pretty wild.
And everybody's saying the SEC will appeal and that maybe the Judge Torres decision is actually based on false knowledge or that it's a crappy decision or whatever. But what they're not talking about is that even if the SEC appeals, we're talking about a year and a half down the road.
Oh, I think they can't even appeal until next year, and then it would be a couple years. And of course, Ripple XRP would drag that out forever. They would, because you can go into court and you can say, oh, the lawyer has a previous engagement. Give me 3 months. They'll drag that out. It might be 3 years, and it'll be a different administration, different chair, different rules. By then, Congress might have acted. So this is kind of a done deal. And also, it's sort of like, if this becomes the law of the land and you see lots and lots of exchanges trading XRP, which we probably will and we should see, then it's even harder for a court later on to say, no, this court was wrong. I'm going to reverse the decision. So it's kind of hopefully a done deal. And hopefully I do agree we are seeing this clarity. It's in a good way too. I mean, if we come out of this with something that says, hey, you've got to register or be an exempt offering under the rules when you issue it using Reg D or whatever, and then once it trades, if it doesn't continue to meet the criteria of being a security, it's not a security. I mean, that's pretty good. That would be kind of a good victory. I mean, it'd be kind of cool if you could, and then maybe it's a small win for the SEC too. They can make you fill out the paperwork when you first sell it, and then once it's out there, you don't have to continue. Because the thing is, and a lot of people don't realize this, this come on in and register thing doesn't work because something like XRP can't comply. They can't be a publicly traded company. They don't have quarterly reports, statements of beneficial ownership, audited boards, all of these kind of things. And they couldn't do it even if they wanted to. Neither could Ethereum or a lot of other projects.
Folks, the reason you're seeing, write it down, the reason you're seeing Congress in a hurry to get these regulations now is The reason, write it down, the reason you're seeing it is because there's a VC, I'll call it a VC emergency. All of these venture capitalists for the last few years, because they thought they had an Ethereum free pass, folks, they thought, okay, we've got cover. We can accept tokens from these issuers and all. That Ripple decision, attorneys out there, I'm not an attorney, they can correct me if I'm wrong, but the way I've heard it and read it, is that those tokens issued were illegal securities offerings. How many, they've called them VC coins and VC tokens, how many VC tokens, Ethereum-based VC tokens, did these venture capital firms cash out on over the last few years? They've got themselves in the crosshairs, I'll bet you dimes to donuts, to quote Mike Novogratz, and that's why you're seeing these lawmakers in VC emergency mode. In fact, Patrick McHenry, who I think is one of the good guys, I read an article not too long ago that I believe it was Andreessen Horowitz that was funding him, or they had gotten his son a job or something like that in the midst of all of this. And they're threatening to move to London. Why do you think that is? So look down here. This was, Wheezy put this out today. This is Daniel Gorfine, who is with the Digital Dollar Project. And he's saying, check out his body language after Ripple is mentioned. On the panel is Brito, who we know is anti-Ripple. And then there's a IBM person who IBM partnered with Stellar. Let's just
money
watch.
licensing laws at the state
Daniel
level,
Gorfine.
a lot of our data access laws, and the operation of banks and money services, of payment systems, fall hardest on the poor, because they're the ones who are at the limit, living paycheck to paycheck, have to pay the fees of a clunky payment system that takes 2 days for funds to come through, have to pay the cost of monopolistic systems that, because of licensing or other anti-competitive rules, make it difficult for new entrants to come in. And, at the end of it, some of the projects that are involved in cryptocurrency are trying to provide payments. And to the extent we don't know what these tokens are going to be regulated as, they have somewhat of an inability in serving the retail customer. I'm thinking of projects like Ripple or other, it's not the only one, but other payments.
All right.
Money license.
So Wheezy brought it up, and it reminded me, remember the congressional hearing? This hearing was literally a month after the Bill Hinman Ethereum free pass speech. You had Lowell Ness, who was Andreessen Horowitz's attorney. Okay, he was the guy that wrote the safe harbor memo. You had Gary Gensler, who's kept Ripple wrapped up in a lawsuit for the last 3 years. There's Daniel Gorfine. That's Scott Cooper, who is one of the biggest guys at Andreessen Horowitz. That's Amber Baldette, who is with Clover here, but she's the one that created JP Morgan's blockchain division. Okay? She's the one that more or less created it and then handed it off to Christine Moy. Why does all this matter? Well, here's Scott Kapoor. Now think about this against the backdrop of this Ripple ruling. The ruling literally said you can't sell to institutions. Well, this is Scott Kapoor 1 month after the Hinman free pass speech, when all of these people on the panel thought that they were in the clear. But now they're not in the clear, because that was just a speech. Now we have a judge's ruling.
The token really, in a sense, is the glue that binds the various players in the ecosystem and provides the appropriate economic incentives for all market participants. Understandably so, this creates a whole new set of challenges for regulators, consistent with recent statements that we've heard from the Director of Corporate Finance.
And as I recall from the Ripple court documents, this guy was one of the guys that was meeting with the SEC leading up to the Bill Hinman speech. So he would have been involved in helping to craft the freaking thing.
The SEC, we believe that the regulatory nature of crypto networks varies with the stage of development of a particular project. Briefly, when a centralized sponsor is seeking to raise capital from investors prior to the functional development of the network, this is probably what is known as an investment contract and therefore properly regulated as a security. However, the nature of the tokens that are delivered on that contract can ultimately be regulated as commodities once the fulfillment of that investment contract has occurred. As stated by the CFTC, some tokens are not securities once the network is functional, and in particular in cases where the network is decentralized from an ownership perspective, we believe that the nature of the tokens looks more like commodities than securities, and therefore probably rightly should be governed by the CFTC. This is precisely because there's no centralized sponsor on which the efforts of the value of the token are largely dependent. Instead, the tokens have value based upon the utility of the service to participants. This actually looks much more like the way commodities trade.
Folks, so, and then here is, if you remember this is the Crypto Fund 3 from Andreessen Horowitz with Chris Dixon, who was involved in ETHgate. Katie Hawn, I've always thought she played a role, and I don't know who that person is. Well, they started Crypto Fund 3, and they expanded their team. Guess who they expanded their team to? Bill Hinman was added to their team. And guess what Crypto Fund 3 does? It invests in crypto assets since 2013 and are more excited today about what comes next than ever. So they're investing in crypto assets, which included crypto tokens, right? My question is, are these, and I asked these attorneys, if A16Z Crypto Fund 3, which was investing in crypto assets, received those assets from the token issuer, is this a violation of securities laws per the Ripple ruling? If yes, does this mean that Bill Hinman, who made sure the Ripple lawsuit was filed, has been violating securities laws as determined by that same lawsuit? You can't make this stuff up, and you couldn't if you tried. And then this today was an interview with Brian Quintance, who is also at A16Z, ex-CFTC guy, saying this.
All you need to do is slap.
He's literally saying talking about the decentralization thing as if the Bill Hinman thing is still in existence.
All you need to do is slap labs at the end of your name, and then you're sufficiently decentralized. That's all you need to do.
I hope not. What we don't want to have happen is to have a law come on the books that allows, JP Morgan to underwrite $1 billion worth of tokens that are actually securities and then dump them on the marketplace. Decentralization is the key. It is what allows individuals to own the representation of whatever a token is, to truly own that. And if you think about that Web3 model, the contributors to the internet, the contributors to networks can actually own, the value of that contribution. That can't happen in a centralized model because it can be reversed, it can be changed. There's going to be a gatekeeper. There's a threat of deplatforming. Decentralization is the threshold, and there needs to be a high bar for it.
And again, folks, I don't want anybody to go after anybody over all this stuff. I want a level playing field. That's all any of us ever wanted, but they refused to give it to us, and so we had to fight it out for 3 years. And so I have a very hard time feeling sorry for any of these people who now get theirs, but I still don't want it to happen. I want Congress to pass their thing, and I wanted to show you this that is in their bill that they're working on right now. It basically says that this nanny state we live in now blows my mind all the time. They're basically saying, which, I guess this is a good thing in a way, but at the same time, it's like, what business is it of the government's to tell me what percentage of my income I can invest in something? But here they're saying in this thing, 10% of your net worth is what you would be with respect to a transaction involving purchase of units of a digital asset. The way I read this thing is maybe if there was a new digital asset issued or something, this would allow investors like me to invest up to 10% of my net worth into a token or something. They're trying to limit the amount of risk that an individual investor would take on or something, I guess. Then Eleanor Terrett says, I'm told Patrick McHenry and his team personally pushed to include the new exemption that allows a pathway for unaccredited investors to get in on initial offerings in the new crypto market structure bill. I think that these are ultimately good things. I think Patrick McHenry is working for the right reasons. So we'll see how this unfolds. But I think the important thing is that now, in my opinion, a lot of the pressure that Congress is feeling now is because there's no telling how many of them and the people that are contributing to them who could have targets on their backs based on the Ripple ruling. The institutional investors who now the judge has determined that they received tokens and it was a illegal securities transaction. And I believe that these people are scurrying around saying, we got to pass something now, or at least they're getting phone calls saying that. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family. There's a lot of scurrying around going on because this is a VC emergency. Thanks for listening.